this November. Rumblings in the financial corridors suggest a change in the wind, a possible reversal of events that would reshape the course of Wall Street's most talked about company. The man whose voice reverberated through Silicon Valley's valleys and who foresaw stock market fluctuations. Dan Ives is well known for his bullish wagers on Tesla, but supposing he was mistaken, come along as we solve the puzzle, examine the facts, and investigate the electrifying investment opportunities that may result in Tesla stock's greatest month to date. Is this just another curve in the road for the EV Titan, or could it be the beginning of the end for Tesla? Fasten your seatbelts as we negotiate the curves of market rumors, financial projections, and the mysterious Elon Musk's grand scheme. But first, show your support by liking this video and subscribing to Tesla Stock News. So let's get going immediately. The charging stations will be used by a large percentage of electric car service users, and the cost per kilowatt hour is an important factor. Tesla has surpassed expectations despite what detractors claim about the dominance of home and workplace charging. Dan Ives, a Wedbush analyst, correctly emphasized Tesla's impressive performance, particularly with the release of its second quarter delivery report, which revealed numbers above Wall Street's projections with 466,000 deliveries compared to a prediction of 447,000. Additionally, production rose, suggesting improved capacity and a stable macroeconomic climate. Given Tesla's unique position in the EV market, rivals like Ford and GM are paying attention. Soon, batteries will take the stage instead of charging, and eventually fully autonomous AI will follow. This is consistent with Tesla's monetization tactics, which are working to refute unfavorable perceptions. Renowned Tesla supporter Dan Ives has noted that the market has responded favorably to Tesla's partnership with Ford and GM. Tesla stock hit an 8-month high after the company said that it will be sharing its network of superchargers. Clearly, Tesla has succeeded in making money. Who else is a believer in Tesla? In your opinion, our buddies over at Seeking Alpha. They are a go-to resource for in-depth reporting on Tesla's progress, providing analysis of Elon Musk's innovative strategies and the company's stock performance. Amidst the normal media hoopla, Seeking Alpha offers clarity and a fresh viewpoint on Tesla. See the link in our description for a detailed analysis and a special discount. Take advantage of our Black Friday deal. Grab it today. Strategic price reductions are part of Tesla's plan, which places an emphasis on growth rather than short-term earnings. This approach has proven quite effective, especially in China. While margins are suffering right now, a recovery is anticipated soon. Ives' description of Tesla as a golden success story suggests that the company is still at the vanguard of the EV sector. Supercharger network adoption for Tesla is increasing, and more firms like Hyundai and Honda are expected to join. Ford led the way in this trend, which quickly spread to GM, Rivian, Volvo, Porsche, Mercedes-Benz, and Nissan. According to Ives' study from Wedbush, Tesla could possibly make up to $20 billion from these collaborations. A share of the $7.05 billion federal subsidy meant to encourage the construction of about 500,000 high-speed chargers along important highways is something Tesla is aggressively pursuing. According to the Biden administration, Tesla's eligibility is contingent upon its network's openness to other automakers. Tesla's solution is still more affordable than its rivals. Spend between $100,000 and $250,000 each connector, even though the company has invested a substantial amount of money in its supercharger network, roughly $42,000 for each link. Tesla stock has fluctuated, rising 10 this week and down 10 over the previous month. These moves seem to be correlated with the success of the tech market as a whole, especially the NASDAQ, indicating that changes in the tech sector may have an impact on Tesla's shares. In terms of the future, the consensus is that tech stocks, including Tesla, which is seen as a transformative tech company rather than just an automaker, may rise sharply in the second half of the year. The anticipation is that growth would outperform predictions, contributing to a rising tech bull market. The most comprehensive supercharger network in the world, Tesla's network has attracted a lot of attention, particularly after recent agreements allowed other OEMs to access its infrastructure starting in the spring of 2024. This calculated approach is anticipated to greatly increase Tesla's revenue, possibly accounting for up to 30% of the company's overall revenue, or $10–20 billion by 2030. Although the supercharger network is a crucial component of Tesla's plan, Dan Ives highlights that it is only one facet of the company's diverse portfolio. Tesla has a strong financial position and is well positioned to benefit from the change to electric vehicles. This is due to a number of factors, including high production numbers, burgeoning Energy sector, technological improvements in autopilot and self-driving cars, strong battery ecosystem, and expanded production capacity. Tesla supports the government's objective of having no carbon emissions by the year 2050. With its EV Castle now ready to monetize its accomplishments, including an anticipated additional $3 billion in income from the integration of Ford and GM into its network, Ives confidently considers Tesla as a powerhouse. In addition, Tesla intends to more than double its present capacity of superchargers by 2024, reaching a total of 7,500 stations. The network's reliance on solar power minimizes energy generation expenses, enhancing the profitability of this endeavor. At the end of the decade, Ives predicts that Tesla's total revenues would have surpassed $330 billion, a significant rise above the $94 billion that was just disclosed. With one of the highest values for Tesla and a target price of $13.50 per share, Ives stands out among analysts based on a forward earnings multiple. This price has been determined, and a sizable number of analysts currently recommend buying Tesla shares, though there has been some volatility recently. Overall opinion is positive regarding Tesla's development trajectory. Dan Ives, who compares the present cycle to one not seen in 30 years, has argued that the decline in its stock valuations last year was overblown and predicts a big recovery in the industry. It continues to have a strong outlook on the tech sector, which includes industries like software, semiconductors, and cybersecurity, despite the challenge of growing interest rates. He has increased his price objective for Tesla to $13.50 because he believes that this is the beginning of a new tech bull market rather than a time to be concerned about valuations. Ives emphasizes that Tesla has demonstrated its potential to profit from its network of superchargers and self-driving technology under Elon Musk's direction. Even though Tesla's stock is currently trading about $12.50 below Ives' estimate, Tesla bears are still pessimistic, especially in light of earnings reports that revealed ongoing price reductions and margin issues. But Ives contends that despite a more than 90 gain in the stock this year, Tesla's growth story is only getting started. Ives argues that Tesla plays a vital role in the tech and AI space, refuting the negative view that limits the business to being merely an automotive. ARK Invest Kathy Wood. Ives views Tesla as a major player in the tech industry, and its complete self-driving technology establishes it as a front runner in artificial intelligence. The supercharging network is merely the beginning of Tesla's service monetization process. According to Ives, this network might bring in up to $20 billion a year by 2030, which would greatly aid Tesla's financial development. This prediction is predicated on the idea that EV adoption will rise from the current 3 to 4 volt vehicles to 20 by the end of the decade. Ives' model takes into account the change in charging patterns from primarily at home and at work to a more varied pattern that includes long-distance EV charging. Analyst Dan Ives of Wedbush Securities characterizes Tesla as the gold standard of electric vehicle success, highlighting the company's dominance in the market. Major automakers like Hyundai, Honda, Acura, and others are joining Ford and General Motors in utilizing Tesla's charging infrastructure, indicating an increasing adoption of the company's supercharger network. Combining this partnership with a larger plan to take advantage of a U.S. government subsidy intended for the installation of 500,000 high-speed chargers may bring Tesla up to $20 in revenue, even while each supercharger network link costs $42,000. The overall investment is significantly less than that of competitors. Tesla's stock has increased 10 this week while declining over the previous month, which is indicative of the volatility in the tech industry. The movement of the stock strongly corresponds with NASDAQ and larger industry developments. To grasp Tesla's future requires a grasp of the complexities of its market strategy, which include its competitive stance and the growth of its supercharger network. Fortunately, Seeking Alpha, our partners, offers comprehensive analysis on these subjects. Click the link in the description to take advantage of a unique offer and delve deeper into their expert coverage. These moves are caused by a number of things, including new product launches, quarterly financial reports, changes in environmental regulations, and even Elon Musk's social media activity. Furthermore, factors pertaining to the external economy, such as fluctuations in interest rates, inflation, and problems with global supply chains, can impact investor confidence in stock performance. It's crucial to remember that short-term occurrences and long-term investor perceptions on Tesla's position in a sector on the verge of a green revolution are reflected in the company's stock movements. Tesla is at the vanguard of this revolutionary wave as the globe shifts more and more towards sustainable energy, thanks to its innovative work in electric cars, battery technology, and renewable energy sources. The company's competitive situation, growth prospects, and fundamentals are all closely examined by investors. With its considerable expenditures in gigafactories, breakthroughs in battery technology, and the growth of its supercharger network, Tesla is scaling up its infrastructure in a bid to fulfill the expanding demand for electric vehicles. The intricacy of the stock analysis is increased by the company's involvement in multiple industries such as AI, energy generation and storage, and automobiles. Every sector has unique opportunities and hazards that have varying effects on the stock's performance. A captivating spectacle for experts and investors alike, Tesla's alignment with the Nasdaq's performance is a dance of numbers, narratives, and expectations where every news bite can change the course of the market. Interest will continue to be piqued by the stock's reaction to market mood and technological developments as we follow Tesla's journey. Ives believes that in the upcoming years, tech stocks will grow into their valuations and usher in a new period of growth. In order to emphasize the company's potential to profit from important items like its network of superchargers and self-driving technologies, he has increased Tesla's price objective to $1,350. Ives continues to have a strong perspective for Tesla, bolstered by a more than 90 year-to-date increase despite a recent downturn in the company's stock that has been linked to worries over margins and price reductions. He aligns with the opinion that Tesla is a significant tech and AI innovation, arguing against the pessimistic viewpoint that regards Tesla as just an automaker. The potential profitability of Tesla services, particularly its supercharger network, which is expected to dramatically boost the company's revenue by the end of the decade, lends weight to this position. By 2024, Tesla intends to expand its network by adding 7,500 superchargers, which will more than double its current capacity and maximize the network's solar-powered energy generation. By the end of the decade, Ives predicts that Tesla's revenue will have surpassed $330 billion days, significant increase over its current trailing 12-month revenue, according to him. Tesla's diverse business portfolio, which includes its supercharger network, energy business, autonomous driving, and fully self-driving development and battery ecosystem, will keep the company's financial standing stable. Ives is unwavering in his opinion that Tesla is well positioned to see significant development, establishing itself as a major force in the tech and sectors and as a pioneer in the electrification of the vehicle market in line with governmental environmental objectives. Considering Tesla's forward-thinking actions and the potential to find the next great investment opportunity along these lines, Seeking Alpha proves to be a priceless tool. Using their stock screener, you may be able to identify top stocks with significant growth potential. Check out Seeking Alpha to learn about Tesla's most recent innovations and more. Don't pass up this exclusive Black Friday deal. Look for the URL within our description. That's what you have now. Tesla's journey is proof of their inventiveness and market intelligence. As we've seen, their success is the consequence of strategic planning, technological innovation, and an ever-expanding network of superchargers rather than just a lucky break. Tesla looks to be headed for more success as a result of industry analysts like Dan Ives predicting a bright future and the company's alignment with renewable energy efforts. What does this imply for EVs going forward? In the quest to become an emission-free society, might Tesla continue to lead? How will the growth of its supercharger network affect their market share and sources of income? Please share your ideas with us on this. Share your thoughts in the space provided for comments below. And of course, don't forget to like and subscribe to Tesla Stock News. We appreciate your time, and we'll see you in the upcoming update.